I'm Sarah Borgson-Keto, and in conjunction with REIT's REIT Week 2020 Virtual Investor Conference, I'm joined by video link today with Conor Flynn, CEO of Kimco Realty Corporation. Conor, thank you for joining me today.
My pleasure.
Now, Kimco has started to introduce curbside pickup across its portfolio. Could this be a permanent feature going forward, and are you considering other logistical changes to help your tenants?
We do see curbside as a natural extension of a lot of the trends that we saw going into this pandemic and accelerating coming out of it. You know, really, it started with buy online, pick up in store as the first trend that retailers were really adopting, and consumers were really enjoying that functionality and that flexibility to go buy online and pick up in store. And curbside is a natural extension of that. You know, curbside pickup we think is a good way to get the consumer more comfortable coming back to the shopping center. Obviously, everyone's going to have a different risk-adjusted type return when they look at how they're going to go shop, and some people will want contactless shopping, and we think that curbside allows them to do that. And so to get them comfortable to come back to the shopping center, curbside is a way to get that consumer really feeling safe in the environment. And then for the retailers, it's a big benefit because it allows them to ramp back up sales quickly. You know, if you think about it, it allows the retailer to take advantage of a lot of the trends that we've seen through the pandemic. Some of our largest retailers like Walmart, Costco, and Target have been utilizing curbside pickup and have seen growth of over 200%. And so our mission was to take those best practices and expand it to the small shop retailers and the ones that haven't necessarily been deemed essential during this period of time, so that they're ready and capable to take advantage of curbside pickup when they're allowed to reopen, which is starting across the country today.
What potential is there for dislocation in your segment of the real estate market, and how is Kimco positioned to respond?
Kimco is well positioned to take advantage of dislocation. We've really prided ourselves in a lot of ways to being prepared for a downturn. If you look at the transformation of the organization over the past few years, we've really transformed the portfolio to be concentrated in the top 20 metro markets and to be predominantly grocery anchored and mixed use assets. We've also prioritized liquidity. We have more than double liquidity of anybody in our peer group at over $2 billion. We finished the quarter at over $900 million of cash on hand. And so this time around, we're in a position to be opportunistic, recognizing that we do think there's going to be some dislocation, both from the private side and potentially the public side. And, you know, when you look at the shopping center, retailers obviously have to evolve with what they're dealing with today, and will probably be evolving constantly going through this. But we see a big opportunity on the private side because many of those private owners have potentially been over leveraged and could create a nice opportunity for buying for Kimco.
More broadly, how will the pandemic change demand for real estate in your segment of the real estate market?
It is a bit early to paint broad strokes of how this is going to change the retail world, but there's no question that it's going to change it, and a lot of our retailers are evolving along with it. If you see what's happening with our essential retailers, and Kimco is close to 80% grocery anchored, the grocery stores have been outperforming in this environment, and they have really captured a lot of market share by utilizing curbside pickup, by shipping from the store to your home. So I think a natural progression is a lot of people have been forced to shop online, and we see that trend continuing going forward. But the nice part about our retailers is they're taking advantage of their physical footprints by utilizing those stores as distribution points. And so I think there's going to be a reevaluation of the real estate. We've always been of the mindset that, you know, the grocery anchored shopping center is one of the most underutilized forms of real estate. If you think about it, 75 to 85% of the real estate is actually just parking lot, and that surface parking lot is not creating any revenue. And so we position ourselves to be focused on redeveloping and unlocking the value of that real estate. And now that we're concentrated in the top 20 metro markets, we believe that parking will be a real asset for us longer term as we look to add mixes of uses, such as apartments, which we've now, you know, achieved entitlements of over 4,500 apartment units. And we now have our goals set on achieving 10,000 apartment units across the portfolio in the next few years.
Conor, thanks very much again for joining me.
My pleasure.
And for more news and analysis on REITs and listed real estate, be sure to visit REIT's website, REIT.com.